good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, as Natalie mentioned, last week we looked at some energy numbers and the overall revenue configuration of the budget equation, and we would have noted that it's been quite volatile over the past several fiscal years. And today we're taking a look at the expenditure side of the equation, an area which we have a little bit more control over. Now, having control is one thing. The question is, do we have flexibility to make any very sharp adjustments in the near term to match those changes that have been experienced on the revenue side? Well, let's take a closer look and see what some of those implications are with just 1 week heading into the fiscal 2021 reading of the budget. So when we take a look historically and perhaps over the past 4 fiscal years of overall expenditures, we can see it's been quite sticky and stable, in fact, around that $50 billion mark. Hovering between from a low of $48.9 billion in fiscal 2018 to a high of $52.9 billion in fiscal 2016. In fiscal 2019, it was pretty much smack on $50 billion. Now, just around 92 to 93% on average of that total expenditure is attributable to current or recurrent expenditure. So everyday, daily or annual type expenses for which there's no capital formation or asset formation. It really just goes into recurrent expenditure, such as wages and salaries, transfers and subsidies, etc. And capital expenditure has accounted for just around 7 to 8% overall of spend over the past 4 fiscal years or so, hovering between around that $3.5 billion mark. Now, for the 9 months of 2020, we can see that it is pretty comparable to the first 9 fiscal months of 2019, with total expenditures coming in around $35.7 billion in comparison to $35.9 in the 9 months of fiscal 2019. So we can expect, all other things being held constant, that expenditure figure is going to come in for the full year at around that $50 to $53 billion figure, which was indicated by the Minister of Finance on several occasions. So there we can see again that expenditure has remained fairly sticky over the past few fiscal years. Now, what comprises that expenditure overall? Well, on average, over 50% of our budget is spent on transfers and subsidies, with just around 35% of that particular portion attributed to transfers to households, so social spending in the main, with another 35 to 37 odd percent in terms of transfers to statutory bodies and similar bodies, as well as state enterprises. So certainly that would be one of the areas that would be under a bit more scrutiny in this particular upcoming budget, given the magnitude of overall spend in terms of composition of total expenditure. Wages and salaries, as we can see in that red column, historically has been around that $9 billion mark. Spending on goods and services as well, around 6.1 to 6.4 billion in the past 2 fiscal years. And capital expenditure, as mentioned, on a much lower side, just around 3.5 to 3.7 billion overall. Now, what can we see in terms of the composition over the past 9 months of fiscal 2020? Well, again, compared to the 9 months of fiscal 2019, we can see that it has been pretty much smack on. So again, very limited room for cutting, doing some nips and tucks here and there, and probably reducing that expenditure burden at this point in time. Overall expenditure for the 9 months of fiscal 2020 so far would have come in again, as mentioned, around that 35.7 billion compared to 35.9 of 2019. And there were no major changes in terms of the composition of spending. So yes, there is an element of control, but there has been limited flexibility thus far in terms of government spending. And going forward, we expect that to result, as has been indicated again on several occasions, in a fiscal deficit somewhere in the order of around $15 billion for fiscal 2020. Now, how does that compare to our expectations at the start of the year when the budget was initially read? Well, the deficit was projected to be just around $5.2 billion at the start of the year, so just about a year ago. And things have deteriorated fairly quickly to that 15 to 15.8 billion figure. And again, with expenditure remaining fairly constant, that deficit or shortfall in terms of revenues over expenditure has been precipitated really by a quite impressive decline, or not impressive decline, in revenue projections for fiscal 2020. Now, fiscal 2021 is not going to look too much better, and that is because we expect that there will be some similar stickiness to overall expenditures. Now, in an environment where the private sector is struggling as well, we would expect the government to continue to be a major driver of overall economic activity for the overall economy of Trinidad and Tobago. And in that regard, for fiscal 2021, we see that transfers and subsidies, especially in a time when more social spending may be required, is probably going to be constant, if not marginally higher in the short run, barring any significant changes to state enterprises and statutory board spending. Wages and salaries are historically very sticky, so we don't expect any major increases or decreases in that particular area. Interest payments may move a little bit higher over the next 1 to 2 fiscal years, particularly given that the debt burden of Trinidad and Tobago is increasing. And as we would have noted, that recent debt to GDP figure is now in the order of around 70 to 71%, which is pretty much in line with the guidance provided by the Ministry of Finance in previous conversations with the public. Spending on goods and services and capital expenditure are expected to be perhaps a little bit weaker. There may be some element of cost-saving initiatives in that regard, but again, because they comprise such a fairly limited part of total expenditure, we don't expect too much in terms of an absolute dollar value amount being saved. So with that in mind, we expect that for fiscal 2021, that gap, as we would have mentioned, projected for fiscal 2020 of around 15 billion, we may see a repeat of something very close to that for fiscal 2021. The good news is we just have 1 week again to wait for that particular guidance from the Ministry of Finance. Well, that's it for this week's edition. Next week, we're going to talk about the investor implications, given all of these expectations that we would have put forward from the revenue perspective as well as from the expenditure perspective. And as usual, for more information, you can check out our website at bourseinvestment.com. You can give our investment team a call at 226-8773 or to Bourse, or as always, email us at invest@boursefinancial.com. And of course, check us out in the business section of today's Trinidad Guardian newspaper. Well, have yourselves an extremely good and productive, hopefully, investing week. This has been the Bourse Report.